light, and the light that you shine can be seen. Steven, let's get this fucking show on the road right now. Ooh, his name is Tavis too, and he's joining live. Sorry.
Welcome, everybody. That was quite an intro by the White House Quant. We're lucky to have him here. Maybe he can do a little serenade at the end to close us out.
Gentlemen, thank you for having me on the Stock Market Unfiltered. It's a privilege.
Well, we are glad to have you. Thank you, everybody, for being here. Really appreciate it. And before we get on, please take a moment and read the disclaimer. We are not financial advisors. We have no idea what your situation is. Please take everything we say with a grain of salt. We just do research. We have no idea what your situation is. This should be for entertainment and educational purposes only. And with that being said, the sign is green. The market's closed green, even though week was red. Tavis, how you feeling?
I'm good, man. It's been an interesting week. Lots of companies reporting.
I'm sure you're happy about a little company called Nebius.
It was okay. I mean, it was pretty flat yesterday on the back of earnings. But yeah, I guess it was up today, so that's good.
But from a company performance perspective, you seemed pretty excited when we were chatting last night.
Heck yeah, bro.
Take the stock market performance out of it. I mean, the future seems bright.
Yeah, I think the future is definitely bright for the company. They reported some pretty amazing numbers. The guidance was really exciting, and I think the direction is going to be good. And quite frankly, I think a lot of the numbers that they reported are going to be sandbag numbers anyways, even though I don't think analysts even know how to think about this business or model it or even cover it. You know, it's still relatively obscure in the eyes of analysts. We just got a price target upgrade on Nebius like today from $90. This is Citizens, from $90 to $175. So
that's a pretty big jump.
It's like basically a double, and just goes to show that like analysts have no idea what they're doing when it comes to Nebius, because right now the market as a whole is skeptical that they're going to be able to achieve what they say they're going to achieve, and what they've shown is that they're overachieving a lot of those numbers. So,
Steven, are you a holder in Nebius?
I am a shareholder in Nebius.
What did you think?
I didn't even really look. I don't own enough of it to even look at the earnings. How about that?
Oh,
you should own more.
I mean, I probably should.
You should own more.
I probably should. I was making other buys this week.
Oh, well, do you want to walk into that, Steven, or is that a segue? Or do you want to continue?
I don't think anybody's going to be surprised when I say what I bought this week.
Can we guess?
Go right ahead.
Microsoft, QXO, I don't know, Google, or what do you think, Matt?
Amazon. A little Salesforce.
You're all wrong.
Oh, ServiceNow.
That was the week before.
Oh. Zeta.
Oh, how did
Quite
it
a
end
bit
of
of
it?
it too.
That's friendship right there.
I am getting more and more bullish, and I'm going to say something that's so bad. I don't mind if it goes lower. It'll just let me buy more shares. I have a certain amount of cash earmarked right now for it in the account. I'm slowly deploying it into weakness, and I just bought more today. I think at like 15.10 or 15.20. I wanted to see if it bounced off of yesterday's lows before I add again, and it did. And you know what? If this is a head fake and it goes lower into earnings, I'll buy more. And if it goes lower after earnings, I'll buy more. I am now convinced that even if this goes lower in the short term, I really could care less, because I do think this is going significantly higher in the future. And I am willing to allocate capital toward that idea and be wrong for at least 2 to 4 quarters. at least, because I think there's a big opportunity on the horizon. The more I listen to this CEO speak, the more I think the market doesn't understand what they're doing. And when I saw the pictures and some of the speeches out of the Zeta Global conference that they just hold, it just made me even more bullish. So I'm super excited for earnings in 2 weeks or a week and a half.
What is the thing that makes you so bullish on Zeta, Steve? Like that you would go so heavy into it that you would be okay with it, falling. I mean, they seem pretty. I don't know, man. This is gonna piss people off, but like they seem pretty like.
I get it. You guys, a lot of people,
mediocre.
maybe not you, a lot of people just think it's just another advertising company or another marketing company. I get it. It very well may be. I think that the numbers are supporting a good investment for me. It is, I don't make many investments like this.
Right.
I really don't. I normally invest in bigger companies, but the trajectory that this is on, and I think that their clients are going to become even more stickier. And it seems like they are really able to generate a high ROI for every dollar spent with them. And more marketing departments are really utilizing this. And at a 4 billion market cap with the numbers it has, I think it's undervalued.
Yeah, we went through the numbers the other night, and it really doesn't seem like it's a very expensive stock, especially down at the $14-15 range. And I could kind of understand as well. Like, actually, I'm curious if Tevis has a way to talk out of this, because I this is completely unrelated, but I need coaching from both of you. I hate saying that I want a stock to go lower so I can buy more, because I know that means in the short term people are losing money, and that also seems very selfish. So, like, how do I say opportunistically I would like to buy more when the price is low if it gets to that point without stomping on people's feelings? Because I know when people say, I don't care if it goes lower, they're like, F you, man, you're a bear, blah, 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 blah. It's
They're
like,
like
well,
me.
yeah,
Say
I'm very much
that,
like you.
say that you can't, just say what I say. I cannot call tops. I cannot call bottoms. I think it's good value here. And if it keeps going lower, I'll just buy more.
There you go.
I think you also just said it, Matt. Like, opportunistically, I'd like to buy more if it goes lower.
Okay.
I think the reason why people get pissed when you say like, "Oh, I hope it goes lower," is because the reality is that just some people don't have the cash on hand to be able to buy every single dip. And I think this dip was one where I was like, I was still buying it, but I was stretching to buy. And if we have like a prolonged dip where we go much lower, I won't have the dry powder to be able to take advantage of that dip. And so that's where it gets painful, because like, all right, your portfolio is in the red, and your favorite stocks are, prices never before seen since 3 months ago. And, you can feel the pain, but you get like a psychological win from buying into that. You're like, okay, I'm doing what I'm supposed to be doing. I'm taking advantage of this. I'm building for the long term. Like, you can hype yourself up if you take advantage of that dip, and even if it's a small amount. But if you can't even have that, then you're going to be kind of depressed when it goes down.
Well, I think that's what unfortunately, I see too many people that get depressed, and some of it is just like, I do see, like, I joke around it as well. Like, I'll make some funny jokes about having to go work at McDonald's or something like that. But in reality, I was celebrating in the shower this morning. I was like super excited. I was like, today I get to buy stocks, and the price is lower than it has been in the past couple months. Like, to me, it was a celebratory moment in the shower where I did a little naked dance. But overall, I still am curious why more people don't think like that. But anyway, Steve, we went through the numbers yesterday on Zeta, and very favorable. I'm very happy that you and many others I know are in the name, and continue to buy more. And I really hope it continues to persist and they meet their growth objectives.
I mean, listen, I could be wrong, and that would be fine too. I mean, I would rather be right than wrong, but I think it's an opportunity. The same way people thought I was crazy about Palantir in the beginning, the same way people thought I was crazy about SoFi in the beginning, I think this is going to be another banger. I don't know if it's going to do what Palantir did. I'm not saying it's going to, but I don't think it's crazy that this can become a $20 billion company. And if that happens, it's pretty easy to do the math on the ROI from that.
Matt, you own neither Zeta nor Nebius, right?
I do not. I do not.
Is there either of those names that interest you?
I'm not really looking to add anything unless it really piques my interest. I mean, other than BM&R, I mean, that was really the only other one. But I've been talking about having an opportunistic point to add BM&R for months. That I've been long on the company, and I think it's going to do well. And I'm not generally one to time companies or time, but I think crypto is one of those things where you do time a little bit. But I don't want to derail the conversation. I mean, I don't dislike Zeta from what I've seen. I don't dislike Nebius from what I've seen. I just keep a smaller amount of portfolio names in my hat.
Well, your timing may be impeccable. You see what David Sachs said today?
No, what did our crypto czar have to say?
President Trump's czar said, quote, after the bill passes, the banks are going to be fully into the crypto industry, end quote, with Becky Quick on CNBC.
Becky Quick fan.
Same here.
He's always able to get it out of the people.
We just need to, this bill gets signed. I mean, I'm excited. See what happens.
Yeah, the bill, I mean, it's possible it doesn't get signed until what, like April?
It's 2 months.
It's not like it's going to happen immediately. But yeah.
That's short term, though. 2 months is not a long time.
That's if it gets signed in April.
Yeah, I mean, it's already the middle of February. Who would have thought we're already 6 or 7 weeks into the new year?
I don't know. I'd be curious to see if that actually has an impact if we're moving to crypto. I'm curious if it has an impact. I still think that we're going to be languishing here for the next 12 to 18 months until the second half of 27. Yes, I think we might see some spike ups. Yes, I think we might see some spike downs, but I think we're going to be hanging out in the 60 to 75 range for quite some time.
I mean, we may see crypto backstopped at the very least.
Crypto what? Sorry?
Crypto being backstopped when the bill gets signed.
Yeah.
Oh, Robinhood launches Robinhood Ventures Fund. Did you guys see that?
I like it.
Yeah.
I will say on this pullback, I have added some leaps on Robinhood. I don't know if I've shared that publicly on a stream. I've definitely messaged it on X. Took the opportunity to go out another year, I think. And then also up $10. So, and then I doubled pretty much the position.
What strikes did you do?
$50 Jan, or was it December's? One of the two. Whatever the longest one is.
Calls?
Yeah. Oh.
For December 27 or 28?
Whatever the longer one is. I'm trying to, I don't know if it was Jan 28 or if they have December 28s out. I think if they had December 28s, then I would have bought those.
That's cool. Yeah, there's a bunch of stuff that I want to just add more into, and I'm just like, need to find money.
How many kidneys you got?
I know, exactly. One too many.
One too many is right.
Well, it's interesting because it looks like SaaS is starting to find its footing a little bit. Stopped going down today. Salesforce was up 2.3%. ServiceNow is up 3.67%. Microsoft was basically flat, down 0.13%. But it looks like they're starting to find a bottom. I still think this is really overdone. Are any of these names interesting, you guys?
I like Microsoft here. I also like Amazon here. I think I sold a put on the 190s for March on Amazon. Jesus, if it gets down to the 190s, I'd be more than willing to take 100 shares. I'll find the money somehow. I just think it. I think we looked at this either yesterday or the day before, Steve. I mean, it's a phenomenal growth opportunity. The fact that it's below $200 to me is a little scary. Even Even Papa Fiorillo thinks it's going to 400. I think it's going to 1,000 in the next 10 years. So to me, that's a 4x. Take the money and set yourself up for $1 million payday. That's kind of where I'm at with Amazon. I don't know if there's anything else that is more likely to succeed. Is it going to be sexy? No, it's been something that's been done, but the moat is there, and I can still order packages and get them there to family members tomorrow. And I think that is something that nobody else can do, maybe aside from Walmart. So the moat that they have is doing well and continuing to grow, and also is starting to expand pretty well into international as well.
I got two thoughts on Amazon. Obviously, I like it. I'm a shareholder. Obviously, I think it's undervalued. I'm going to expand on what I said the other day. I'm not going to regurgitate it. When I think about these companies, Amazon, Microsoft, Alphabet, Meta, all the great ones, right? People are now, because Amazon is going to be free cash flow negative for the first time in a while this year, they're starting to question the CapEx. And it feels like the same thing as before. But once again, Amazon wouldn't have gotten to this level if they went the path of not reinvesting in themselves and just giving buybacks and dividends. And I love dividends and I love buybacks. But at the same time, you have to understand that from a business perspective, for them to achieve their long-term goals of creating shareholder value, this is where they are saying they have to allocate capital. And for the market not to respect that, I think is doing us a great service for long-term purchases, because I think we're catching the market off sides because they're misunderstanding what is happening here. And Jassy could very easily scale the CapEx down to 100 billion or 75 billion and do a $25 billion a year buyback program and throw 20 billion in dividends and still have probably 10 billion in retained free cash flow. But they're choosing to go to war. They're choosing to win, and they can't do that without allocating this type of capital. And I just think that this is going to be a moment in time, whether it takes a year or 2 years, that we look back on it where, shit, we should have trusted these CEOs that they knew what they were doing. We should have trusted that they are going to monetize the capital that they're allocating, because the only thing that they have done is build a track record of monetizing that capital. You look at the long-term balance, not balance. You look at the long-term cash flow statements or the long-term income statements. All we see is monetization of profitability. And we should not be scared of them spending 200 billion in a year in CapEx.
I mean, we're not scared of it. The market is.
Well, the market, you know what I mean.
Yeah. I think it's like the longer it stays under 200, the more chances I have of buying more. I bought some after the earnings dip at like 204 or something, 205. And now I'm like, should have waited an extra week. But
you
don't know. It could have gone up. Yeah, it could have gone up to the races.
And how about this? Why are we so, what's the right word? Why are we so complacent and allowing the narrative to be that Walmart and Costco are a flight to safety? Why? Because somebody wants to make an argument that their revenue is sticky and durable. How about Amazon's? When has Amazon's revenue ever reversed? When? I mean, they play in the same exact area. The only difference is Amazon does not have physical locations. Amazon's revenue is just as durable and just as sticky as Amazon or Walmart. Oh, sorry, at Walmart or Costco. But they're not getting the multiple, yet they have an AWS. They have the advertising platform. It makes no sense. And I think the market is being caught off sides right now.
I've never seen Amazon cheaper.
No,
the
never.
fact that you have the current price to earnings ratio below $30 for a company like Amazon that is still growing as fast as they are and is premium, right? Because keep in mind, I will give a premium business with a high moat 20 to 25x earnings, no problem. Coca-Cola, Pepsi. Yes, I know that's expensive. Yes, I know they're not growing super fast, but because of the premium nature of those businesses with the moat that they have, the customer base that they have, I will gladly give them a 20 to 25. Same thing with Amazon. So you mean to tell me that they're only pricing in like a 4 to 5x on the normal price to multiple extra to consider the growth? When you have AWS's profitability growing like gangbusters and continue to grow at a 25% clip rate, and then the overall business itself is growing north of 10%. It's I don't know. I don't and coupled that with these guys haven't even focused yet on ops margin. Like they have a little bit, but if they honestly hyper focused on ops margin, which I think Steve said it appropriately, they could buy back stock. But why buy back stock if you're getting a return on capital of 35, 40%? Or being able to reinvest that in data centers where you're getting 30, 40%? It doesn't make sense to buy back the stock, reinvest the money. It doesn't make sense yet. So to me, it just, I think that we'll see the fruits of the labor, just like we saw in 2020, 2021, when they threw in $50 to $60 billion a year in capital expenditure, eventually pulled back on that. But we saw the outcome of the revenue generation and the net income from that.
Yeah, I mean, go ahead, Thomas.
It's 9th red day in a row for Amazon, which would make it the longest losing streak since 2006. So in the last 20 years, this is the longest streak that Amazon has gone. And you have to keep in mind that like it's re-accelerating in the growth. Yeah, I agree entirely with Matt. Like I think this is one of the cheapest valuations that you can get for Amazon over here. And it's just Amazon's always been disrespected by the market relative to the other Mag 7 names. Like it's always traded at a discount. But this is just ridiculous discount.
So I'll argue and debate this with anybody who wants to debate this. I will, you can come on. I'll give you 30 minutes. I'll give you an hour. Respectfully, I will debate you. I'm happy to. Anybody, open invitation. What revenue is stickier, my friends? Company A that is expected to do 706 billion with a 4.72% growth rate, and then 742, then 778 billion at a call it 4 to 5% growth rate year over year, or Company B, which I should have freaking done it privately, that's going from 805 this year to 896 to 1 trillion at double-digit growth rates. I'll argue that Amazon's revenue is stickier than Walmart's, has double the growth rate, and they're growing revenue on a dollar basis by double year over year than what Walmart is. So how can we say Walmart is a flight to safety when Amazon is growing on a dollar for dollar basis, its revenue by more than Walmart's, and it's generating more in an aggregate than Walmart? I don't understand why we're allowing, as an investment community, this narrative to give Walmart such a high PE. It is insane, and it needs to stop.
Well, the thing that's most... Sorry, go ahead, Thomas.
It just trades in a basket, right? Like they get sold off and they get piled into this basket. And like, I want to point out, when was it? 2 years ago that we were talking crap about Google, and Google was like the most hated name on the street.
What do you mean?
What
were you saying? We?
I wasn't talking.
Yeah, what are we saying? We?
I was freaking defending it the whole way.
Hold on, Jesus. Me and Roy were talking crap about
There
Google.
You go. There
and
you go.
Matt was on the pod, and Matt was like, "Yeah, well, Google's still Google. Google's still going to do their thing." And only after Google hit the new all-time highs did it become a darling again, and like were people like hyped up about Google. So I think like it's very much sentiment driven from that perspective. Like you are hated until you reach some new all-time high, and then you become the golden child of the market, and they just absolutely love you. And it's happened with Nvidia, it's happened with Google, it's happened with Meta, and I think it's going to happen with Amazon too. Just give it time.
They hate us because they ain't us.
Oh,
Anus because anus, Steve.
I like it.
But no, I mean, we were talking about this when you and I first started streaming together, Steve. We were talking about Amazon 1 trillion revenue in 2029. They've completely erased 12 months. It's going to be 2028 at this point.
Yeah, the analyst community has taken it up by a year.
And I don't think that that's huge, right? In terms of being able to accelerate potential profitability. I fully don't comprehend. It's as obvious to me as Google was, right?
Same here.
So, and the only problem that I had with is that I miss Meta and this whole thing, but over the past 6 years, I mean, but I guess 4 years, I guess if you're only talking about from 2022, but it's just extremely obvious. But I am surprised to see Tevis drinking a Red Bull.
Why? Tevis loves his Red Bull.
He's a Celsius guy.
No, he just likes energy drinks in general. How about
They
that?
stopped selling the good flavors north of the wall, or
yeah, they don't sell anything up here. Just anyways, would you guys, like, if you only had to pick one and you didn't own either, would you only buy Amazon or would you only buy Meta?
Ooh.
That's real.
Matt, go first because I'm building something out.
I don't dislike Meta, but I just feel like I have more comfort and sleep well at night owning Amazon, knowing that I use the product more. I say I use the product more. I'm on Instagram every day, shooting the shit with y'all, but on the chat. But in Tevis, I send him. Well, Tevis he's not even on Instagram, but I wish he was, so that I'd send him crazy shit. But I don't know. I just feel like more of a connection to Amazon. It's been one that I could see easier. Meta, I don't dislike it, but I think it's just a cesspool. Like, so in terms of that feel good factor, I know it makes a shit ton of money. And I normally can look past investing in certain companies because I'm a capitalist and I can kind of afford go through and bypass my emotions a lot of times. But to me, I just think that Amazon has a lot longer of a longevity. I'm not saying that Meta's failing at any point. I'm not saying their businesses are bad. I use their businesses, since Facebook was around, since Instagram's been around. I think Threads is a cesspool. I don't want to be involved in it at all. I know some people that absolutely love it, but I'm fearful that for them, that some misstep may happen, that people get turned off by Meta, and then that would be a faucet to their other businesses. What I think is admirable about Meta is their metaverse ventures, and I don't expect it to print money today, but I would really hate if they stop that. But to me, I just think that the mode on Amazon is just too much to ignore. Stefan? Oh, he's putting up together some graphs.
Yeah, I need one sec. Hold on.
Thank you everyone for being here. I know I don't normally stream on Fridays, but apparently they needed a redheaded like individual because Roy isn't here. And so I was the only person in line.
Bro, speaking of Instagram, I saw this clip and it was literally like Steven Fiorillo, age 12. And
oh my God, I think I know who you're talking about. Please share.
And can I even find it? I don't even know if I can find it. Let me see. And it was just hilarious. I don't know if I can find it without like us being banned or whatever. But it was really funny. Hold on.
Yeah, you don't have to. Don't worry about it.
Don't worry about it, Tevis.
All right.
Steve, can I play this clip?
No.
It might demonetize us.
No.
But it's gonna be funny.
No, I don't care.
Dude, why would it demonetize us?
I don't know.
If there's even a chance, the answer is no.
Heard it here first.
Steven, you make $3 from this stream.
I'm not trying to get any strikes. Don't care.
Oh, it's not. They just cut out the segment, dude.
Yeah, no.
Okay, well,
The best is when Chris tells us we're not going to get demonetized, and he brings up a clip of fucking Chappelle show, and I'm like, yeah, of course we're going to get demonetized. Like, fuck.
So somebody said that I can't argue with numbers with Amazon and Walmart. Okay. I'm not trying to argue.
See what you did? You got
With
Steve
it.
angry, and he's pulling out the numbers, guys.
Yeah.
Come on.
I'm
You know
showing
better
the
than that.
numbers.
Y'all know
and
better than that.
Here you go. Amazon's on the top, Walmart's on the bottom, and Walmart is sustaining a mid-single digit year over year through 28. Amazon is sustaining a low double digit. Their revenue is stickier. They're adding 88 billion in revenue in 26, 91 billion in 27, and 113 billion in 28, according to the estimates. Okay. Walmart, still great, but 22 to 40 billion they're adding a year. So how is Amazon's revenue not stickier? And how is Amazon's revenue not considered a flight to safety compared to Walmart? Like, at some point, the market has to start using the same logic for the same stuff. This is illogical, which is not even a fucking word, and that's why I said it, because it doesn't make sense.
Man, you really upset the milkman, guys. Why would you do this? Why?
No, but it's more, let's take a realistic approach to things. If Walmart and Costco are going to be flights to safety because you buy durable goods and you buy groceries, and the idea is that people are always going to go there, and in a good economy, people like a deal, but in a bad economy, people need a deal. Why wouldn't you apply the same logic to Amazon, where people would rather purchase from Amazon because now they don't have to drive, spend the money on gas or anything else, and it comes directly to them? It's the same logic. And by a revenue standpoint, Amazon is growing quicker and generating more revenue. So how is this not just as sticky, if not stickier revenue? How?
What I don't
Weren't we-
understand. Sorry, go ahead, Tivis. You probably have
weren't
more
we just
intelligence.
chatting about Amazon versus Meta? I don't know. Like, yeah, we get it. It's better deal than Walmart. But like, the question was, Steve, if you weren't in either, would you go in Amazon or would you go in Meta? That's what I'm interested in.
I will answer that in one sec. Just how can we consider it not as sticky? Like, it just doesn't make sense.
I think people in the chat are just saying shit to just like upset you or something.
Probably.
Because people are like, Walmart doesn't even need to grow. I'm like, what do you mean it doesn't need to grow? Do you have a price to earnings north of 30? Like, are you just chatting to chat? Like, what? Like, do you have like a brain between your ears? Like, I'm not trying to be a dickhead, but like, please use some common sense.
Oh, I love this comment. I'm sorry. I love this. Steve sounding like Dan Ives must be rubbing off after the pot. I do these numbers every day for years. Like, Jesus Christ. To answer Tevis's question, it's a hard decision. And I'll tell you why.
You've been in both for a long time.
I have zero problem investing in Meta because I could care less if their products create cesspools. I don't give a shit. Like, it's a legal product, just like alcohol is legal and just like tobacco is legal. So I am not anybody's keeper. So as long as the business is legal, I have no qualms about who invests in it. Now, I think that Meta has built the greatest flywheels out of any company because you have billions of people creating the content every day that is going on their platform, making all their friends and families and strangers click on it. You can't replicate that. It is so sticky. It may be the most sticky thing. So they're both great companies. I think I would probably invest in Meta here over Amazon only because the profit margins are insane. And Zuck, I think, is really onto something with the wearables. I really do. But even if he's not, it's just probably the greatest flywheel out of any business anybody's ever made.
I'm actually kind of curious if Chris is still, because Chris, for anybody that wasn't at the meetup, Chris Patel was wearing some Meta glasses and he was really vibing. It was kind of funny, actually. So we were actually having drinks when everyone was still flying in, and we were just kind of waiting and got some something to nibble on while people were flying in and getting into the area. And I just sit there and I'm just like, Chris is just staring off into the distance, and he's like moving his hand around like this and touching the glass. I'm like, what the hell? And then I was like, oh, he's wearing meta glasses. But like for a second, I was like really confused as to what the hell was kind of going on. But he seemed to be enjoying them all weekend. So I'm kind of curious as a follow up, what does he think, and if that's a potential, because obviously it doesn't look as military like as the Google Glass.
Dude, I tried them. They're so freaking cool. And the fact that you can like listen to music on them and nobody can hear you listening to anything is the weirdest feeling. And I can see the next evolution being better and better and better. And just, it's going to be really cool. Like, I just think that moving from the pure, social media type of business, ads business, to now having like wearables and actually investing in, metaverse, as corny as it sounds, for them to throw money there. And then also AI on top of that. Like, there's so many different call options, let's say, on where they're going to find their growth in the next 5 to 10 years. The product is really cool. And I definitely want to buy a pair now.
Are you in Meta as well?
Yeah.
And think about it. Everybody who wears glasses are already used to wearing glasses. I wear glasses for the majority of the day. It does not bother me one bit. And when you think about the next evolution of social media and being able to wear those when you're playing sports or snowboarding or skiing or going hiking, anything like that. And then when it becomes a legit personal assistant and you can actually have a Tony Stark Jarvis inside of it, I mean, that's coming. If we can't use our imaginations to believe that that's actually going to come, we're so short-sighted, especially in the age of AI, that I'm happy as a Meta shareholder that Zuck is going down this road, because the idea that we're going to be stuck on screens indefinitely is crazy. And if he can be first to market with a great product, he's going to own the market.
Yeah, Google Glass really fell flat on its face.
I was so excited about Google Glass. Oh my God.
But, I'm probably not going to get on board until they have Google or Meta contacts and they can play the music through my eyeballs. Until then, no, I'm just kidding. I mean, it is really cool. Like, we were sitting in the car with Chris and he was listening to music. You hear like little rumblings, but you couldn't hear. And he was like listening. Like, we were trying to talk to him, and it was pretty cool. Yeah, Glass was too expensive. And I just think that it was too. But I think they should have stuck with it, man. Like, they had enough money to really stick with it. I think they should have.
And it's trading at a great valuation. It's trading at a depressed valuation with a lot of growth. People are too freaking scared about this CapEx boom. Has anybody not seen what the CEO of AWS said? Did you guys see what the CEO of AWS said?
I seen it, Steve.
You saw it. I mean, how are people still worried about CapEx? Oh no, these companies are going gangbusters for a year or two, or maybe 3 years. Oh no, stop looking at the short term.
Yeah, I mean, Satya Nadella is very bullish on a lot of these upcoming AI agent companies that are building themselves pretty much. I know that Sundar is very bullish on them as well. I think he uses Cursor, he uses Replit, one of the two, and he's like very impressed by it. Like, he tries to make his own sort of thing. So I don't think that has hit mainstream yet. I think people have seen inklings of it and pieces of it, but it's going to continue where everybody has a separate computer or multiple that are basically trying to replicate what they would want robots to do, but they can't. And so they're building AI to do it instead of a physical robot. I bought more Amazon today.
I'm very proud.
I'm proud of you, Steve.
I mean, you're a good role model. Amazon is a great company. I mean, this quote just makes me so bullish on so many things. Even with all this investment, my best estimate is that we will be capacity constrained for the next couple of years. That's what the CEO of AWS, Matt Garman, said. And now think about what that actually means, everybody. Capacity constrained for the next couple of years. That means that they have more demand for the next couple of years than what they can actually build out. That is not bearish Amazon spending $200 billion on CapEx. That is holy shit. Let me buy as much Amazon as I can today for these levels because they're going to make this back so much more than what they're spending if they're capacity constrained for the next couple of years. This is a runway for the next decade or two, at the very least.
Steve, I'm kind of curious. So, in the pod with you and Dan Ives, you talked extensively about SaaS and how it's continuing to go down.
Mm-hmm.
Have you added enough, or is this a place where you hope that it kind of stays suppressed here for the time being so you can continue to add? I know you've added, but have you added enough?
Never enough, right?
Oh,
I mean, I don't have unlimited money like people think. I mean, I wish I could add more, but I am adding. And I think that we're going to, I don't know what is going to be the switch that flips. I think the problem is it can't be proven and it can't be disproven that enterprise software is not going to be disrupted. I don't know what it's going to take, but the street is calling bullshit when they're not downgrading the revenue or the EPS guidance on these companies. That's the street calling bullshit on this. Now, for the market to not go along with that, something completely different. You think about how ridiculous this is. You have people selling Microsoft off because of a couple of tweets and a narrative blowing up on a couple of tweets. Like, I'm sorry, I'm not getting caught up in that. I'm going to buy. I did buy more Microsoft around $399 or $401, somewhere around there. I'm not getting shaken out of a position because somebody has an opinion on the internet, and nobody should get shaken out of anything or buy anything because I have an opinion. I just happen to do a lot of research and use common sense. And common sense is telling me that most people talking about SaaS, they're using AI on a desktop and they're just imagination's going crazy. I'm going to be able to create a movie and watch it on my computer. People are going to be able to create databases. They're not going to have to spend money on enterprise software. That's not how business works. It's just not. And these people are not the decision makers. They've never run an RFP. They've never done an implementation large scale. They've never worked at companies that have thousands or tens of thousands of people. It's just not how business works. And are there companies that are going to go under? Sure. Are there companies that are going to get disrupted? Sure. But to think that SaaS is going to zero, I have a very hard time believing that. And the biggest telltale is you're selling off Microsoft because they are a software heavy company, yet they're one of the building blocks and major components of the AI revolution. How much of an oxymoron do you need to get?
yeah. I think the market is very full of oxymorons. But speaking of people that are just chatting and have literally no idea about business, Michael Burry.
Hold on. You're writing a whole dissertation on neurology, I saw.
I am. I mean, anybody can write it.
Can you interview me?
Steven, what do you think about neurology?
I have no fucking clue, but let's write a paper about it.
I think that's a bright idea. I think we should write at least 10,000 words.
Let's
and we should probably
10,000? That's child's play. I could do 10,000 in 6 hours. Do 20,000.
Tevis, do you know anything about neurology?
I am so lost as to what you guys are talking about.
Michael Burry is a neurologist, yes?
Yeah, world famous. That's a doctor.
Yeah, he's a doctor, neurologist. That's great. He's a very smart man. I don't dispute that. He decided to write a 10,000 word dissertation and put it on Substack about Palantir and why it's basically going to zero. And he interviewed a bunch of people that also have yet to use the software. And this keeps getting all these individuals that have literally never used the software doesn't interview any of the big 10, top 20 companies. I'm a user at a top 20 company of Palantir software. Why don't you interview me, Michael Burry? I'll tell you everything you need. I'm not an expert, but I'll give you my experience. He keeps talking like these people in the chat that are talking about how Walmart doesn't need to grow. You know what I mean? Like they're talking about simple stuff like that. They just have zero experience or knowledge. It's just hearsay. It's like, hey, I'm an AI. I work in AI, and I think that Palantir is like, well, have you ever used the software? The answer is probably no. And then same thing with some other person that talks, and it's like, I can't believe it. If you want to tell me the company's expensive, I'll listen, and I agree with you. You want to tell me that this company is a Fugazi, and you've never used the goddamn product, nor are you interviewing people. Like, if you think about it, there must be some stupid companies out there that have been their top 20 clients for the past several years that decided, hey, you know what? From 2024 to 2025, we're going to increase our sales with Palantir by 40-odd%. You know what I mean? Like, that was a quote, right? Like that legitimately was a real thing. The top 20 customers grew their net dollar retention with Palantir by over 140%. I don't know if any of them left, but of that subset of top 20, they grew the revenue by 40% year over year. So to me, it's like somebody's obviously doing something right. But Michael Burry, on the other hand, thinks it's a Fugazi, company's going to zero. And so to me, it's just the equivalent of that is me being no idea about neurology and deciding to write a 10,000 word dissertation and putting it on Substack about neurology and interviewing a bunch of people about neurology who also have no idea about neurology. So Tevis, you are now included. I want to know what your thoughts are about neurology as a science and what is going on with that, so that I can write a Substack about it and get $329 a year. Will you sign up?
I'd be careful about the shit you talk about Michael Burry. You do know he called the 2008 housing crash, right? Like, if he called that, then he's absolutely going to be right on this. So you got to be careful.
He's not right on everything. He's been right on a few things.
I'm kidding. Matt's going to flip the table.
No, I mean, I think it's worthwhile. I mean, I've been a fan of Burry until this point, right? And if he just stuck at the fact that is it expensive stock? Yes, I would 100% agree with him. I've been on that board for a while. I can understand where people poke holes in that, but the fact that he's just like chatting with people, like, I'm just gonna start talking neurology on the street. Like, I just don't understand.
Bro, I'm waiting for the Michael Burry basis points episode. And I'm trying to manifest that. Steve, get on it.
Steve,
there may have been a text that I sent saying we should get him on.
That would, to be very fair,
there may have been a text.
I would love
where
to
I said
that
we
one
should
would blow
try
up.
to get him on.
I'll fly in for it, and I'm not going to be mean.
Oh, look at this!
I thought he had me in the first 2/3 of that. I was like, Burry Ken. I was like, this is going to be the greatest basis point episode of all time. And then I read the third word, and I was like, there it is.
Honestly, that would be a bang. That would go viral. Like, if you guys, early Palantir investors versus Michael Burry in a basis point, episode.
I mean, look,
I would.
I have a lot of problems with what he's saying. Like, a lot of problems, because he's not doing the due diligence. And I think it's freaking wrong. I can talk all the shit I want about Palantir. I'm a shareholder, and I do the due diligence every quarter. And I mean, he's just not doing the due diligence. I don't know how he can put out what he's putting out and sleep at night. I think it's crazy.
Feel good. I don't understand it.
I think it's crazy.
Dan, I've said it perfectly when you guys were chatting. It's like, I'm the one going to these countries to check in on these companies and talk about what they're doing before I make big investments. What the fuck? I mean, anyway, I'll stop.
No, you keep going.
You guys can sub to my Substack on neurology, $329 a year.
I'm trying to find what I put together. I may not freaking save
help me piece together the timeline here. He announced that he was short on Palantir. He closed his short early. Palantir dropped like 30%, and then now he's coming out again, shit talking Palantir, even though he doesn't have a short on it. Like, did I get that right? Or
Yes, but after he closed a short, or I think he closed a short, I'm like 85% certain he did. Then he decided that it was going to be a big reveal. Something big is coming. Something huge, Tevis. And he just releases a fucking Substack for $329 a year. And then, of course, what does he do? He starts putting all this stuff behind a paywall so people have to pay for it. Well, of course, if you're fear-mongering about one of the most retail-focused stocks in the market, people are going to pay for your Substack, as well as the fact that the guy was huge in GameStop and many other items like the 2008 financial crisis, like you stated. People are going to pay $329. So I think, he decided, well, instead of having skin in the game, I'm just going to write on Substack and get money that way. And I'm all for people writing on Substack, right? But like, to me, it's like, put your money where your mouth is, right? Like,
yeah, you'd think Fighter's Destiny threw it up. You'd think for someone who's as rich as Burry, having a paid Substack is kind of running antithetical to that. But what do I know? I'm just the poor.
Oh, so apparently it is still holding.
I'm very annoyed right now. I could have swore I saved the PowerPoint that I did on Palantir for my video, and I don't think I fucking saved it. I'm so pissed off right now. How the hell does that happen? How did I not save this? There's no way that happened.
Was it a PowerPoint or was it a
power
slide?
No, I made a power.
If only used Google Slides, man.
Even the rebuttal.
I use Google Sheets to make the charts, but I put it in a PowerPoint.
Davis is so proud of himself.
So annoyed. I'm fuming right now.
I feel like he's gonna reach through the screen and beat my ass.
No, why?
Because I'm talking crap about Office.
That's fine. You can. You absolutely can. Oh, this is so annoying. I'm gonna have to rebuild this whole freaking thing now. God damn it.
Let's just watch Steve's 15-minute video on Palantir.
No, but I can recreate it through gibberish. So hold on. This is why I have a problem with what Burry said, all right? And I'm sorry it's not as clean as I'd like it to be. But they have an S-curve in revenue, okay? Their forecast of $1.5 billion in Q1 2026 is amazing, okay? Do I think the stock's expensive? Yes, it's expensive, okay? I'm not buying it here. But I don't know that it needs to go under 100, and I don't know that it needs to trade at any type of realistic valuation, the same way Tesla doesn't have to. The reality around it is he's missing two very critical things. First, this slide right here, or this table right here. They've done around 670, 680 deals in the trailing 12 months of over $1 million each. That's incredible. Around 200, 220 on $10 million plus. The fact that they are doing this many new enterprise level deals and none of these are in the 139% net dollar retention, I'm calling bullshit on what Burry says. Okay. Commercial count.
Like, Steve, is he like, I'm just trying to understand, is he taking an issue with the actual fundamentals or with the valuation? Because those are two different things.
I think he just thinks the company isn't doing anything special either. So I mean, I think everyone can agree that the company is overvalued, but I think he's thinking that like everyone's being taken for a ride here. Like that's what it feels like he's saying, and I just don't understand how you can see the trends that you're seeing here and you feel like people are being taken for a ride.
Yeah, I mean, you look at the customer count, They are obviously not a black box. They weren't even a black box when people were calling them a black box because everybody knew they worked for the government and they worked for the CIA. So that's the next thing. Respect the fact that they can't talk about some of the stuff that the DoD hires them to do, but they're very open about working with the DoD. That's not a black box. And then you what are you going to do? Complain about SBC? Well, SBC as a percentage of revenue has come down drastically, and it's flatlining now. It was over 50% back in 2021. Now it's at 13.5%, 14%. What are you going to do? Complain about SBC when the company's growing the way it is? I don't think so. Bullshit. And then when you look at free cash flow, I mean, once again, S curve and free cash flow. And then you got a free cash flow margin in I don't know why that didn't update. It was around 49%. Here's the big
Steve,
thing, the model. Okay.
The last time, okay, hold on. I'll let you finish.
So when you look at where the analyst has everything, they did 4.47 billion in revenue this year. The street is expecting them to do 7.26 billion next year, 10.14 billion in 27, and 14.39 billion in 28. Okay. When I do my model, and look, my numbers could be wrong, but they're somewhat close. I think they're going to do 65%, not 62.24% this year. I think they're going to do 45% next year and 40% the following year. My 2028 is just under the consensus estimates. But when you look at my model and I extend it out to where I think they get down to high single-digit growth in 34 and 35, if they maintain the same free cash flow margin that they currently have at 46.94%, that puts them generating $11.5 billion in free cash flow in 2030 and trading at 27.32 times free cash flow based on the current market cap. Is the company expensive today? Sure. But everybody says the market's forward-looking. We're all supposed to be forward-looking. Well, okay. So forward-looking to me, long-term investments, 5 to 10 years. I look 10 years out. The company's starting to not look that expensive. And if I put 600 billion market cap, it's still not looking that expensive. So I don't know. Is it expensive today? Yeah. But is it expensive in the future? Probably not if they can maintain these margins.
So, Steve, the last time that you had such a compelling case this strong was with Sir Joseph, and you wrote a pretty long thread calling him out. Where's
I'll do the same for
Bird?
Here's the problem. I don't pay for his Substack, so I don't know everything he said.
I think
I'm
Arnie
a little hesitant to call him out without reading his Substack article.
I think Arnie summarized his Substack article literally in the comments of his
post.
But
I would want to read it word for word because I don't want to take him out of context. That's the biggest thing. Because I don't think that's fair to him.
I think you guys should have him on basis points. I would very much like to be there. I'll be very respectful. I won't say I'm running a Substack on neurology, even though I am. And anyway,
look, I want to read what he said so I can better understand his case. And look, him saying that this was a short at 200 obviously worked out. Him saying it was overvalued obviously worked out, but he wasn't the only one that was saying it was overvalued, but he was one of the only ones that took a short position. He should be congratulated for that. But to have a narrative, and I'm not sure the narrative is actually going to zero. I'd have to really read the Substack, but the way the summarizations look, the way that I've read them, is that companies are being taken advantage of, to put it nicely. Matt, would you agree that that's somewhat what he's saying?
Yeah, I always say stocks are going to zero, right? So, that was an exaggeration, but he's literally advertising that with some of the conversations he's had with people that him as well as others think that companies are being taken advantage of and that what they're doing is not that special. They're just organizing data. It's like, well, if it's that great, then Why don't these companies do it on their own? Why are they paying companies billion? Like, why is the U.S. Army signing up for another $1 billion contract if it's that easy to just organize data? It's the truth of the matter is it isn't, and it's not just about organizing data. It's about forming relationships and an ontology. And people just sit there and be like, "Oh, well, ontology is just organizing data." Yes and no. Like, if you ask AI, what is the square root of 64, and it says Tuesday, your ontology's fucked. Like, like that's part of the problem is that everybody's enterprise data is organized, but does it actually have the appropriate relationships so that if you have a supply chain go down, it has the appropriate ideas and relationships built in the back end to know what things you can rely on, what things you can't. And it's not as easy as just organizing data. Like you need, and they're like, oh, well, these forward deployment engineers, you have to pay them. It's like, of course you have to employ these people. They know how in the 21st century, how these companies should be operating, and you're still operating it as you've built legacy systems over the past 100 years. And Bill left, and there hasn't been able to update since Bill left in 2009. So I see it all the time. It's like, nope, don't touch that computer over there in the corner, or be very careful. Make sure it stays on overnight, because God forbid that computer turns off, and next thing you know, you won't be able to update the systems.
Matt, I have such a good story about my days at Bed Bath. Now, keep in mind, when I was there, they were a $60-70 billion company, okay?
The glory days.
The process to scan stuff in, so I won't take you through the whole thing, but basically in the e-commerce division, the companies would send products in for Bed Bath to photograph. So they would either send photos of the way they want each individual product to look on the website, or collection photos of everything grouped together. If they didn't do that, they would actually send the physical products, and Bed Bath would take care of doing all the photo shoots and arranging it, getting the copy ready, and throwing it up. In the warehouse, they had a homegrown system built on Access with a little scan gun from a supermarket to scan every barcode into the system to put it into a database. And the guy who built it left, and everybody was so scared because nobody knew how he coded it. And something happened and it wasn't scanning. And it took 3 coders, like 3 or 4 days to fix it, because they said it was a spaghetti string of code. They had no idea how he wrote it.
This is all American business.
And
this
this
isn't just
was
Bed
a
Bath.
$60 or $70 billion company running their e-commerce, like a key component of their e-commerce division on Microsoft Access.
It's all American businesses, because the legacy mindset is like, if it ain't broke, don't fix it, because fixing it costs money and it costs time and it costs effort, and things get neglected. Tech debt becomes a very real burden that compounds over time. If Burry is saying that Palantir is taking advantage of their customers, and yet their customers are still expanding their deals with Palantir, then fundamentally there's like a case, like I don't know what his case rests on. Fraud? They're misrepresenting the numbers, or somebody's lying about something, because it's like the customers wouldn't be expanding their deals if they didn't see the value there. And so, like, what is Palantir? How are they getting the expansions? I understand how they would get the initial deal. That's like, you can sell something to somebody that they think they need and they don't actually need, but you definitely wouldn't get the expansions. You wouldn't get the renewals. You wouldn't get anything like that. So what's going on right now?
One of the arguments. Sorry, go ahead. I didn't mean to cut you off.
No, that's it.
One of the other reasons he said is that the business is basically run on relationships. What business isn't built on relationships? One, and then two, yeah, relationships can get you through the door, but they're not going to get you to increase your revenue 40% from 2024 to 2025, right? Like, eventually your companies are going to get found out. And to me, it's just, his arguments don't stand on, and I think he's trying to bring up so many arguments and move it everywhere. Like I said, I think if he was just strictly like share-based compensation is high, the stock's overvalued, I'd be like, bro, you're right, dude. But the other things he's trying to poke at with respect to shit that we debunked literally from 2021 to 2023 when everyone thought it was a black box. Like, come on, it's 2026.
And
Like,
the worst part about when people were saying it was a black box is that they had a very public deal with Airbus for their entire system, Skywise. Everybody knew it. And there's other companies that I won't name that they had very big deals with also at the same time when they're being called a black box. So, I don't know, pretty stupid narrative. I mean, look, I did a video, came out this morning. I gave Palantir a lot of praise. I also said I'm not bullish at the moment. I think the stock deserved to go higher off the earnings report, but based on the valuation, it's hard for me to get behind it at these prices. But I also don't think it deserved to go down the way it did off of an incredible earnings. And if you want to be forward looking, the future valuation of this company looks really interesting.
what the F?
What's
For a
wrong?
second, for my SoFi, I went on Robinhood and it said it was $127 a share. Now it's fixed though.
You wouldn't see me again, my friend. You wouldn't. You wouldn't.
Not on
What do you
stream.
Y'all wouldn't see me again.
Period. You cut me off. I don't blame you.
What do you mean? What happened?
So
my Robinhood was screwed up on when I was looking up SoFi and it said $127 a share.
Interesting.
Tavis said that I will.
Jared Matheson, thank you very much. Dookie Pie is here. Drink some milk. I have some iced coffee right here.
Oh, okay, Graham Stefan.
Has milk in it. And Dookie Pie, I owe you an answer from yesterday. I don't know that Palantir gets to 75, but if it does, I would be pretty interested in starting to buy again. I would redo my valuation. I don't think it's going to get there, though.
Tavis, what you've been out for a while. What would cause you to get involved again?
honestly, man, I this latest earnings was really. I did this. I showed it to Roy for. He pulled up fiscal, and he pulled up the growth rates, and every single quarter, the growth rate was like declining. And I remember I finally sold when the growth rate was at 13%. Because like, if you pull up fiscal right now, you can just see the growth rates, and it went from 30 to like 27 to like 22 to like 17 to 13 or 14, something like that. And it made such a clear V in terms of the actual growth rate, because right after that, a few months after, they introduced like AIP, and they were doing the free boot camps and whatnot. And I looked at I was traveling back actually from New York when they were reporting earnings, and we were just waiting for our plane. And I just see Tanner with his headphones in, and he was listening to the earnings, and I was just like, listening to music or whatever. And he just takes off his headphones and he just like stares at me, and he's like, dude, this might be the best company ever. And I was like, dude, you're not even in it. Like, you should get in it. He's like, dude, insane numbers. And then I looked at the numbers, and the acceleration is wild. Yeah. So look at this. So I basically sold the exact bottom of revenue growth back in the second quarter of 2022, because they were like, Carp was saying, we're going to do 30% CAGR for the next couple of years, and the growth rate was only coming down. So you can see the white line there, 31, 26, 27, or 28, 27, whatever, 18, 18, 13. And when it hit 13, right after that earnings, I was just like, dude, but like, if you erase the second part of that graph and it's just going down, like it's very hard for you to be like, yeah, this is going to have a hard V-shaped recovery in terms of the revenue reacceleration. But then that right after that, they introduced the IP, and the revenue growth just went insane. So I wouldn't be against it, honestly. I think that I was kind of thinking about it more and more as the price was falling. It's still pretty aggressive. But Dan Ives in the Basis Points podcast actually had a really interesting comment around like different ways to value a company like Palantir. And I think, yeah, it really depends on if they can keep their growth rate going or where the stock price goes. But there is definitely a price at which I would get back in. And I have nothing bad to say about the actual business. I mean, I obviously did have bad things to say about the business back in 2023, but their growth rates are drastically different now than they were back then, right? And the execution is obviously there. The growth rate is accelerating. So this is why like the Bury thing confuses me, because I'm like, it's so much easier to pick on the valuation than it is to pick on the actual fundamentals of the business, because largely they've proven it out. So
I mean, that's the problem that I have with a lot of this is that there's nothing you can say about the business.
yeah,
Nothing. I mean, this is one of the greatest businesses we have ever seen. Q4 is arguably a top 5 quarter that I have seen from any company in my life, and I cover a lot of companies. Now, I'm not talking about it on a dollar for dollar basis. I'm just talking about straight business metrics. One of the greatest quarters I've ever seen. So it's really hard to beat a company up when they are executing like not many companies we've ever seen before.
19% quarter over quarter revenue growth. We're not talking year over year. We're talking quarter over quarter. And the quarter before that was 18. The quarter before that was 14. And it's like, if you just, it's like, come on. And not only that, but the net dollar retention.
139%. People don't understand what that actually means. And it is infuriating.
Where is NDR in here?
I gotta take another look to see like if gotta revisit the actual numbers and the valuation, like what I feel comfortable from a price perspective, just to have it in the back of my mind as to like, oh, if it hits this price, I would go back in, or if it hits this price, I would nibble versus going heavier or whatever the case may be. It's what like 130s right now?
Tevis, let me show you something. I'll do something for you. But before I do, just think about this.
130.
680 deals, over $1 million, 292, over 5, and 187 over 10. And none of these are part of the net dollar retention because they don't add in companies that are in the trailing 12. So what happens next year in the second half when all these companies are getting upsold on products and adding services? You really may see Palantir exceed a 40% growth rate for the next 3 years. It could happen. Now, in the model, if we go on a free cash flow basis, if we put them at a 150 billion market cap the whole way down, I mean, 30 times 2027 based on a reasonable growth rate, 21 times 2028 based on a reasonable growth rate, that looks pretty cheap. So and that would be Palantir getting cut in half today. So it's 65. You put it at 200 market cap, it still doesn't look crazy from a long-term valuation.
Bro,
it still doesn't look that crazy expensive. I'll
just make it easy for you. With these numbers that they reported last quarter, if Palantir got cut in half, I would buy it right away.
Yeah, I'm not disagreeing.
At
all.
And I wouldn't even feel bad about it. Like I would buy it, and I think now it's been 2 years of accelerating growth. They can't keep the acceleration of growth up forever, although they can definitely try. But again, like I said, I don't have anything bad to say about the company. So yeah.
Yeah, next year is going to be tough. So if they're able to continue at the pace that they're continuing, into 2026, that would be insane.
It's crazy, Maddie, because like I was talking about this with Roy on one of the podcasts where I was just like, my learning with Palantir was to I should have given it a couple of more quarters, because literally if I gave it one more quarter, I would have turned around from 13 and then it was just like up from there. And I would have never ended up selling it because the growth would have come back. And I think as a result of that lesson, I let other things in my portfolio hang on for too long, which I should have cut after, 2 bad quarters in a row. And I let it hang on for like maybe 3 or 4. And so I think that's like such a difficult thing to do, is like, how much rope do you give your companies before you sort of cut them from your portfolio, if they're not performing to the standard that you want them to do. So anyways, that's one of the, live and learn type of moments. But it was a small position, and I think it would be nice to flex the cost basis that I had, but fuck it. It happened.
Oh, yeah.
Yeah, I mean, look, the reality is that everybody's got a story like that. And if Palantir keeps selling off, it's going to look really attractive to a lot of people. And I don't think it's going to get under 100 for that very reason. If it starts getting close to 100, I think you see a lot of people stepping in and starting to backstop it.
100 to be 250 billion market cap?
Around there, yeah.
Still expensive, but in terms of the future growth, like I don't.
Still expensive, but from a psychology aspect, people remember it being 212 and like, shit, it's at 100. Maybe it can get back to 150, 175. I can make 50, 75%. Because half of it's psychology also.
Yes and no, Steve. Like there's kind of like, look at, I mean, this is not a, good comparison from a company perspective, but like sentiment is a real thing, right? Like Duolingo fell from 450 to 100 and nobody's picking it up at 100.
They're because it's a stupid company.
My point being is like sentiment is, once that turns, like people just don't want to pick it up. So
hold on. There's a reason Duolingo fell the way it did.
No. Don't like latch on to the Duolingo specific case. My point is there's going to be a lot of people that bought it, Palantir, I mean, at 150, 160, 170, up to 200. And those people are going to be sitting on a lot of losses. And once it goes down to 100, let's say, you're going to have the rest of the market being down as well. It's not going to fall in isolation. And so you're going to see more deals around, and you're going to see more people that are sitting on paper losses, and so on and so forth. And so I don't think it's going to be as clear cut and dry of like, oh, it's at 100. I have to buy this immediately. Sure, there's going to be people doubling down, but there's also going to be people who are like cutting their losses because they think it's going to go to 50. It happens every single time.
Yeah. Listen, people will sell because they think that it's going to keep going down. They want to get their money out while they still have a profit. I'm not going to disagree and say that. What I'm saying is a lot more people are probably going to backstop at 100 because a lot of people probably didn't get in.
Yeah,
and they remember where it was and that it's falling. And the reality is Palantir is a much different company than Duolingo, as we all know. And one company is a de facto Department of Defense and large enterprise scale company. The other one makes a learning platform that can be disrupted by a teenager that decides to code an app.
Sure. I'm not arguing the fundamentals. And look, one thing I will say as well is we are still like 3% or 4% from SPY all-time highs.
Yeah, the market's doing fine.
You've seen a big discrepancy between high beta names versus the rest of the index. And if in fact you do get this thesis playing out where the rest of the index is going to take a 10% fall, right? We're going to have an actual correction or something like this. Then you could very easily get into that level where Palantir gets cut in half, along with, SoFi, along with Robinhood, along with all these other names, because you're going to get hit way harder. So
it's not funny because Palantir is getting caught up in the SaaS thing, yet they're the ones that are partly disrupting companies. And it's another reason why the whole SaaS to zero thing doesn't make any sense. Because technically Palantir's a SaaS company.
I mean, technically they're an AI company as well.
Some would say.
So they're getting hit with both.
Some would say. They're going to disrupt themselves, right?
Yeah.
Doesn't make any sense.
Shall we wrap right there, or what do you think?
I don't know. Do you want to keep going and just keep this going instead of the after hours? What do you want to do?
It's up to you guys, I guess.
10 or 15 minutes and we'll call it and no after hours this week?
Sure.
Works.
Sure. Do you guys? I don't know what your group members like about it, if they do after hours. They like care about it or not. I don't know.
You know what I've been doing for my members, Matt?
Making them money.
I've been turning my notes from my articles into videos with Notebook LM.
Oh, I have seen that. Yeah, they. I like those.
Crazy.
Notebook LM's amazing.
Does Seeking Alpha not take, not get mad at that? Or I guess they can't.
It's my notes. I mean, I'm not putting the article up. It's my notes.
Hmm.
I'm putting my
Barry replied to my
PowerPoint and
tweet?
stuff in.
No, he didn't. There's no way Burger replied to my tweet.
So, what are we looking at for the future? We need to think about
Oh shit, he did.
what?
Burry did reply to my tweet and he said I'm a bozo.
Did he?
Yeah.
Show it on screen. I want to see this. Another bozo that did not read it.
Congrats, Matt.
Matt, you're famous, baby. Love it.
I'm retweeting it.
Love it. I mean, here's the problem. Why are you putting it behind a paywall? I'm generally interested in reading it. Why are you putting it? I'm not paying you $400 to read your article. It doesn't make sense.
Matt, you should respond. Be like, can I get a free trial on your Substack so I can read it? I'm too broke for this. Oh, man.
Listen, I can't go to war with anybody unless I have the facts. If anybody has the article, send it to me. I'm not paying for his Substack, but I want to read it. I'm not responding to something I don't have the facts on. Yeah, I get that Arnie read it. I know Amir read it. I want to read it for myself, though. I don't want to read somebody else's notes about it.
Bro, how does Matt get himself into these situations? He ends up on the White House site.
He's the White House Quan. He's allowed to.
I'm the fucking guy. I'm just that guy.
On Twitter beef with Michael Burry. Like, what?
Oh, yeah. I'm just that guy. Not afraid.
It's pretty heroic.
I got to think of something.
I mean, let's see. I truly want to read the article.
Do you guys get your payout on X today?
Yes.
It was like way larger than my other payouts. And I didn't like the views were not particularly special. So I think you remember Elon tweeting at Nikita to raise the payouts? Bro, I can't wait for X to become an actual real, to show real promise from the content creator payment perspective. Like, that'd be great. They tried with articles, but I just want them to actually create some type of a replica for YouTube so that they can actually pay comparable rates. Do you know they only have like 30 people working for X?
I mean,
like 30. I covered this with Roy earlier today. The head of product for X said we only have 30 people, 25 engineers, like one designer, one product manager, and like that's like the entire company. And their revenue per employee is like $96 million. It's
pretty amazing.
What were the other, 2,700 people doing?
No, well, I mean, they used to have over 2,000 people, and now they just have 30. by contrast, PayPal has 24,000 people.
Once again, at what point do we become vultures?
Can I ask a serious question? How different is PayPal from when Elon and Peter Thiel were there to today?
I have no idea.
Yeah,
Probably
I'd be
not that
curious.
different.
Yeah, I'd be curious. I mean, once again, it's like how many of those 24,000 people? And I hate saying that, right? Because you need to employ people, but at the same time, it's like you need 24,000 people.
Dude, I will get bullish on PayPal when they reduce that headcount by about 23,970 people.
I mean, you just want them to get rid of everybody.
No, but like, okay, so
have
hold
30
on.
people running it. You're
Everybody.
like, this might make sense.
So no, like I'm not inherently bearish on like, oh, like I want these people to lose their job. Not at all. My point is that a company like X, they're showing that they can run super lean. And maybe you're right. You know, maybe the real number isn't 30, but it's definitely not 24,000. It's significantly less than that. And I guarantee you, if you take, you know, a highlighter to all the top 50 Fortune 50 companies, 50 of them, 50 out of 50 are completely, they have bloat. To what degree, I'm not sure, but they definitely have bloat. Because it's so hard, it gets unruly to manage that many people efficiently. Like you need to chunk out your team so small, and then lines of communication get broken. It's a whole thing. So that's fine if you actually have growth and you can sustain that growth and you're efficient. But if you're a company like PayPal and you don't have any growth and you still maintain all of those people, then people start asking questions like, what why? What are all those people doing? They're not growing your company. So what?
So once again, at what time are we getting in? Never?
I don't know, bro. We had this conversation. I think
I know.
the extent that I would get into PayPal is 2028 spreads at the money. Go like $40 to $65 for 2028 and chill. That's pretty much it.
And where to finish today?
40.29. Dude, it went all the way down to $38. That's wild.
I know.
Jeez, that's crazy.
And the worst part was I was thinking it's not low enough. How bad is that? I'm actually like, it may not even be low enough at this point.
Who knows? Crazier things have happened.
I know. Freaking crazy. Did you guys watch the Dan Ives interview?
Yes.
Yeah,
What
great
did you
job,
think
by
of
the
the
way.
last 2 minutes?
I don't know.
Just
Is he still in the chat? I don't know, man. These are classics.
I told him that I want to clip that and put it on my fucking page.
you need to.
It's already out there.
You need to use that as a clip and send it around. You know how everyone has like those clips that they send. You know.
Yeah, you can make it like vertical format and it'd do great.
The fact that he said to me that I will block somebody that has not seen The Godfather after Dan said it, I couldn't help myself.
And then he puts his hands his head straight into his hands. He's just like, Jesus fucking Christ.
I couldn't help I cannot believe that happened. Couldn't believe it.
It was a good question though. Why is Rutgers better than Penn State? I liked it. I giggled off of that. It's not true, but I giggled.
I mean, Penn State's kind of a powerhouse. Kind of. Tavis, what are you doing for the long weekend?
I am not much, man. I'm staying in.
Nice.
Is the market closed on Monday?
It is.
I was like, what am I going to do?
It's a federal holiday on Monday.
I need to find purpose in my life or something.
Well, I will be working all day tomorrow.
Yeah.
Going to try to do 2 streams and write 2 articles.
Valentine's Day with Steven Fiorillo. Love it.
Actually, 3 streams. I told Alex I would go on his channel and do a stream.
Are you going to have a candle in the background?
Talk some alternative assets for a little bit. I'll be on tomorrow night for everybody that does not have plans.
Person that said Rutgers is better at parties has obviously never been to Penn State.
And then Sunday, going to go do a little shopping. And then stream at night, try to write an article. I'll tell you when we end. And then Monday, back to the grind. Gonna try to write and stream. So,
Steven, will you be my Valentine?
I mean, I thought we already were.
Oh,
You were singing in the beginning and everything.
da 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 da.
Tevis, you coming to LA?
Probably not. No. Matt, you need to when we sign out, you need to sign us out with a song. That's now your thing.
Got to think.
When is LA, Steve?
March 28th. I
Yeah.
already booked my hotel.
Oh, look at you.
Steven, I think what you need to do is sit down and write a business plan with Miss Michelle and figure out when you're going to start this cookie distribution center in Texas.
There are things that we have to look into with the laws about certain things. And I honestly, I have not had the time to follow up right now.
But that's New York. New York, like you can't get out of bed without having to get the government involved. So like, Texas, you can do whatever you want. It's America down here.
Yeah. Guys, don't worry about me.
I'm worried about you, Steve.
No, not you. The comment, Steve, don't you have a wife? Take her out on Valentine's Day. It's Valentine's. Who goes out on Valentine's Day?
And you don't know the shadow government, okay?
Right.
You don't speak for the shadow government.
Who in their right mind goes out on Valentine's Day? Like, seriously. Crazy talk.
His name's not Tev, it's Tavis.
Going out on Sunday instead.
Senor Tavis.
All right. I guess we're going to call it.
You're a good man, Steve.
Thank you, everybody, for being here. Really appreciate it. We'll be back at you tomorrow. I think Matt's going to come on one of the streams tomorrow. Not sure which one yet.
What time?
What song are you signing us off with, Matt? Let's hear it.
Now that I'm on the spotlight, I don't know.
Anyway, thank you for being here, everyone. We will see you over the weekend. Please go follow Tevis. Please go follow Matt. We'll see everybody later. Have a great night, everyone.
Love you all.
Adios.
Take these broken wings and learn to fly again. His name is Tevis and Steven. I don't know the rest of the words. I thought you were